If someone said, I'll give you 139% return and you've just got to pay 5% interest to get 139%, what would you do?
It's highly reckless strategy, I would say.
If your Bitcoin becomes the digital currency of the future, then your banks are going to be the Bitcoin treasury companies, aren't they?
Yeah. Absolutely convinced.
I don't know, is it 5 years from today, 10, 20 years? I'm not sure, but the system certainly cannot work.
A lot of people argue, say, why don't you just go and hold the Bitcoin directly? Why are you paying a premium effectively for holding Bitcoin? And there's a couple of reasons why people do that.
Welcome to the latest episode of the Intelligent Wealth Podcast. Today, as usual, I have my star attendees and contributors, Carl Roberts, who's a fellow director in Minerva Money Management, and our head of research, no less, Awet Girmay. This podcast is for serious investors who are looking at companies to invest in, who do their own research. Typically, we focus on a quality investing strategy, but we do diversify a little bit, as we will be doing today, arguably. I must emphasize, you must do your own research. Please don't take anything we say today as advice or tips on which shares to invest in, because in my experience, whenever you follow tips, even from great investors, you'll invariably go wrong, because your portfolio has to reflect your personality, your time scale, your amount of money to invest, etc., etc. It has to be very personal to you. It won't work otherwise, believe you me. So, without any further ado, we're going to get into the heart of today's discussion, which is about a company, which is a so-called Bitcoin Treasury company, which I'll explain to you in a moment. The company we're looking at today, for a change, is a UK company, and it's called the Smarter Web Company. Now, this company was formed in 2009 by a British chap called Andrew Webley. Now, what he's been doing for all these years is developing websites, maintaining them, and monetizing them. He has quite a good, solid business with some very good statistics for turnover and gross profit margins, etc., pretty high, like in the 90% plus for gross profit margins. But that is, relatively speaking, a small part of the business. He has managed to get the company publicly listed on an exchange called I think it's called the Aquis Exchange. It's not the full market in the UK. And what he did very cleverly, he was able to buy an existing PLC that was going through hard times or was failing. So he managed to pick up a bargain, because normally if you were to turn your company into a public company, it would usually cost millions. And I think, if from memory, it cost him about $500,000 to do that. So it's quite a relatively low cost way of turning his company into UK PLC, quoted on that stock exchange. He's also got it listed in Germany for Europe, and also on the what's called the over-the-counter market in America, where you just match bargains between buyer and seller. It's not a fully quoted stock exchange as such. Now, what he did very innovatively, he turned his company into one of the few companies in the world that accept payment for services with Bitcoin. And he started that in 2023. Now, there is a famous company called Strategy or MicroStrategy, which we've covered previously in one of our podcasts. This is the first true Bitcoin treasury company, and he's really mirroring what Strategy have been doing for a few years now, and he wants to make his company a very highly valuable UK-listed Bitcoin treasury company. Now, what is a Bitcoin treasury company? It's a company that issues either debt or shares in their own company in order to use the money to buy typically Bitcoin, although it can be other cryptos like Ethereum. So it's really, in many respects, an investment company primarily. And now, because of the explosion in value of Bitcoin, the Bitcoin Treasury aspect of this company, the Smarter Web company, has become the primary trade or investment strategy for the company. It's dwarfed everything else that he does. He's got a interesting goal to acquire 1% of all Bitcoin. Bearing in mind there's 21 million Bitcoin out there, 1% is quite a lot. It's quite an ambitious target. Whether he'll ever achieve it or not, only time will tell. But I think that gives you quite a good opening summary of Andrew and the company, the Smarter Web company. So what I think we'll do now is involve the team in discussing it. So to kick off with, let's put some meat on the bone, Carl. What do you have to tell us about the Smarter Web company?
Well, let's look at performance first. So the Smarter Web company listed on the Aquarius Stock Exchange in about April 2025. So not that long ago from recording this podcast. The Aquarius Stock Exchange is a UK-based exchange. It is regulated by the Financial Conduct Authority, but it's mainly for smaller kind of growth companies. So a bit easier to list on there rather than, let's say, the main market. So they listed in April 2025 for around 4 pence. And by the end of May this year, it got to about £1, their share price, which is a 2,400% return. So pretty impressive in just over a month. By mid-June, it went up to £2. So it doubled its value. And then it peaked around the 20th of June at about £5 per share, which is a 12,400% return if you'd have got in right at the beginning. So pretty impressive if anyone held or bought at the start and then held till then and sold it at that point. Because then a few days later, it crashed down to £2, which is then a 60% fall. And now it's hovering at just over £1. So it's essentially fallen 80% from its peak back in June. So it's been a pretty volatile ride so far for the Smarter Web company. But of course, it's early days. It's only just listed and it's been obviously buying its Bitcoin. So it's gone from 0 to about 2,500 Bitcoins in about 5 months, which is pretty impressive. But when you look at any of these Bitcoin Treasury companies, there's a couple of things you need to understand. And there's some techie terms I'm going to go through now, which I might not do a very good job of explaining. But one is the MNAV. So the MNAV is essentially a multiple of the company's net asset value. So effectively, sort of how much extra are you paying for buying a share in this company? And a lot of these Bitcoin Treasury companies use the MNAV, and it's quite a followed measurement when you're comparing like for like. So the Smarter Web company's MNAV is currently around 1.6. So you are obviously paying a premium for holding Bitcoin essentially. If you look at the likes of Strategy, they're about 1.4. So they're not a million miles different. I mean, a lot of people argue and say, well, why don't you just go and hold the Bitcoin directly? Why are you paying a premium effectively for holding Bitcoin? And there's a couple of reasons why people do that. People do it because if you've ever tried to go and buy Bitcoin on an exchange, it is quite a complicated process if you're not that financial savvy and you're not that tech savvy. If you want to sort of self-custody it, which means effectively taking Bitcoin off an exchange and having it on some sort of hardware wallet, again, it's quite complicated. There's things like seed phrases. If you lose that, you could potentially lose your Bitcoin forever. So you can imagine someone that's not that fully up to date with all the information would really struggle to get their head around how to just go through buying Bitcoin. Whereas buying a stock is quite easy. People have done that for years and years and years. So people feel more comfortable buying shares in a company rather than going straight to the underlying asset. Another reason is because these companies are on regulated stock markets. So, for example, Smarter Web Company effectively is regulated by the FCA. Strategy would be regulated in the US by their regulator. So there's a bit of kind of security there that these things are properly looked at and watched over. And essentially, you can put these kind of shares in your ISA and your pension, whereas you can't put Bitcoin directly into your pension and ISA and other UK financial products at the moment. So there's a number of reasons why people might do this. So that's that. The other thing to technical terms to try and understand is the Bitcoin power law. So if you're a true believer in Bitcoin, or many true believers in Bitcoin, they follow this Bitcoin power law. And essentially, it's a mathematical sort of scientific model that tries to plot the Bitcoin price over time. And the reason why it's so popular with Bitcoiners is because they feel Bitcoin is more of a new natural phenomenon rather than a kind of traditional financial asset. They feel it's so new that you can't use traditional metrics to try and plot its price increase over time. So this power law, what it essentially tries to do is, using sort of science and maths, the more take up there is of this asset over time, the higher its price will go. And it's actually been pretty successful so far in the last 10 years of predicting when Bitcoin will hit certain price points. So it did predict about $100,000 price around January this year. And it's also now predicting that Bitcoin will get to, I think, 1 million between sort of 2030, 2035. So it's not like completely accurate and says on this date, this is what the price is going to be, but around those kind of ballparks. And it's important to understand the power curve, because that's what these Bitcoin treasury companies are essentially betting on. They're betting on the price of Bitcoin going up according to this kind of metric for a considerable amount of time. And as long as the growth rate does continue on this trajectory, they feel they've got a model here where they're getting lots of traditional fiat currency now, lots of debt, which is effectively going to be inflated away well into the future if you continue to hold Bitcoin. So that's their kind of model overall.
Yeah. Can I just ask you a question, dive in there before we get on to our, when you talk about MNAV, do you mean like when you talk about the net assets, you're really talking about the value of the Bitcoin effectively, aren't you?
Essentially, yeah.
Or money, cash set aside to buy more Bitcoin. So when you talk about a ratio of 1.6, what you mean, that the value of the Bitcoin is 1 and the value of the shares is 1.6, like ratio?
Effectively, yeah.
Effectively, it's a premium of what, 40 odd, 50% over, no more than 50% over net assets. It's a premium, basically, if listeners understand that concept. Okay. Yeah, come on, Albert. We know that you're the Bitcoin skeptic amongst the group here.
Yeah, I think
so let's have your bearish view on Bitcoin treasury companies. Come on, spit it out.
Yeah, I think I always find it, how you can use Bitcoin to forecast the future when it's quite difficult to, like with traditional businesses, there's always cash flow, there's a lot of input. And I think we're still, a lot of that time, we get it wrong. I mean, we try to get most of the time right and few wrong. But with Bitcoin, it's difficult. It doesn't have any cash flow, and it doesn't have anything apart from like someone is willing to buy more reseller value. And do you remember there was a hedge fund called Long-Term Capital Management?
Yes.
1998, I think there was all Nobel Peace Prize winners and Nobel Prize winners in finance. And what they did is they had models forecasting about the future of so on and so on. And they bet on few things. And suddenly they were bankrupt. I mean, they were pretty much gone. And I think the lesson you learn is models, when you try to forecast the future, is very, very difficult. I think it's Isaac Newton, one time he said, I can calculate the moons, but not the madness of man. So that tells a lot. Human beings are quite irrational and is very incalculatable. So it's hard to calculate the future when there's human irrationality involved. And I think in this case, with Smart Web Company, is pretty much trading at premium. And I think for US investors, there's a lot of option to invest. Instead of paying the premium, they can go through ETFs, or they can just go buy directly Bitcoin. Or companies like Coinbase, pretty much they have almost 50 to 60% of that balance sheet is Bitcoin and Ethereum. So you're still buying those exchanges, while has a lot of advantage in that than rather paying premium for Smart Web Company. I think the reason that Smart Web Company that is like very difficult to invest is a true business should have a recurring income, which is we agree and we can use that recurring income to calculate, how much the value of the share should be. But in this case, the company is relying on just raising capital and continue to do so. And I think we've seen it recently. The market appetite for this cryptocurrency and Bitcoin has been a little bit slowing down. And I can see the shares of MicroStrategy and the MetaPlanet, the Japanese Bitcoin Treasury company, has, struggled as well. Even as you mentioned, Carl, smart web company share price is down 80%. We can see the risk here clearly. It's not different historically, but what's different is, I think Charles Mackay in his book, he said, the new generation comes, they think then, the old, speculation is still a new thing, but historically is always the same. I think what you find is, you're looking at history, this is one of the speculation. We can see 80%. If you're an investor, you bought at £6, you are pretty much suffering huge, loss. Pretty much you wiped out because the share is down 80%.
Yeah, but if you paid 4p and they're now a pound,
yes,
then you're pretty happy.
Yes, that's true. So as we said, the model is still relying on new funding, and they have to, keep doing it in order to work. As we mentioned in the last podcast as well, you have to keep raising money in the system to work. And they have recently issued a convertible bond. The convertible bond is linked to Bitcoin price. So when you have a convertible bond linked to Bitcoin price, is pretty much you're betting heavily on Bitcoin. If Bitcoin benefit, your bond the payoff would be greater. But if it doesn't, you still suffer greater losses. So there is again here, as you mentioned, Carl, you have to believe in Bitcoin in order to make these bets. But the risk is, why would you want to convert convertible debt into volatile asset? We know, if it's an asset is very volatile, when the price goes down, the convertible bond would be worthless. We know that because it reflects the asset price, how much investors are willing to pay for it. So there is a lot of risk here we can see. And then in terms of accounting as well, these businesses don't have real business. So what they do is they pretty much, their profit would be on gain on Bitcoin. And how long, if there's, always have to use, gain on Bitcoin and account it as a profit, or I'm not sure how is that in terms of GAAP accounting, how is that taken into consideration? There's quite a lot of questions that we need to answer, because the accounting rules are not clear here on Bitcoin, because when companies invest in shares, whenever gain they make is actually, they report it as profit, but we can recognize it. With Bitcoin, is it taken into consideration? I'm sure that MicroStrategies and they have a different way of metrics of operating on the gains and so on. But it's very unclear for us here.
Can I just dive in there a bit? What we have to remember, regardless of what happens to Bitcoin, if you're really smart, and I think Michael Saylor's pretty smart at strategy, you don't have to even issue debt. You can just issue shares. And if you got a no dividend paying policy, then you're not actually accumulating any debt.
Yeah, that's the best way to do it.
That's the best way to do it. And most companies, I don't think they're there yet with all the different strategies, the smarter web company, but most companies in this space, particularly strategy, have multiple methods for raising funds. The ones that involve paying interest, like convertible debt or just bonds, or they call them in America, they call them perpetual preferreds. I think we call them irredeemable preference shares. I think often the interest rate can be quite low. I mean, it might be anywhere between 5 and say 10%. I mean, some of the strategy ones are 10%, which is remarkable in itself. But when you think about it, if you're buying with no repayments, which is issuing shares, then you're just selling shares. You're not actually incurring any debt or any outflow, a cash outflow, if you're not paying dividends. So you're raising the money effectively for free. And you're investing in an asset which in the last 16 years, Bitcoin has risen by 139% a year for 16 years. And even in the last 5 years is up 950% last time I checked. Now, I'm not saying I'm predicting the future that it's going to carry on like that, but it certainly has worked in the past. If someone said to you, I'll pay you, yes, I'll give you 139% return, and you've just got to pay 5% interest to get 139%. What would you do? You'd do it, wouldn't you? So I'm not saying I'm predicting the future. You're spot on. No one can predict the future. Totally agree with you on that one. But none of us know where Bitcoin's going to go. What I have noticed is that the belief in Bitcoin, which is definitely there with Andrew Webley, because I heard him in a podcast recently, is amazing. I mean, a lot of the really keen Bitcoin investors are absolutely convinced it's the future of money. Equally, there's just as many people who are convinced it's not going to work. It's a scam. There's no in between. My instincts as an investor is not to go all out into this type of asset. I personally wouldn't invest more than 5% of my investable assets, and I would not commit money that I wasn't expecting that they had a potential to lose all of it. So in other words, you've got to go in saying, personally, I think you shouldn't put in too much. I think Carl's different. Carl mentioned before the show he'd put in maximum 10%. But these believers will put in 100%. I don't personally think that's a good idea. Now, the thing I wanted to throw into the ring for you good guys to discuss with me is, does this strategy, not just Bitcoin, but Bitcoin treasury companies, does it, in your view, have the hallmarks of a Ponzi scheme? By which I'm not saying it is a Ponzi scheme, because I don't think it is. I think it's got the hallmarks of one. What do you both think? How about you, Carl? What do you think?
There's certainly elements of a Ponzi scheme in the fact that currently they are requiring more and more new money to obviously service the existing returns for existing investors. So that is a kind of a classic Ponzi scheme element, isn't it? Where basically you're promising returns to the early investors and you need new investors to come in to be able to deliver those returns. But where I would say it's different to a sort of a Ponzi scheme is that, one, it's got something that actually backs the sort of debt and that, which is obviously the Bitcoin. Two, is these companies are highly regulated. So like I said earlier, they're on professional exchanges that are world renowned, with very strong regulators in the US and UK. So and it's all transparent, so they can't get away with doing anything illegal, and we're not suggesting that. So I think on those 2 points, no, it's not a Ponzi scheme in traditional sense. I mean, let's be clear, Ponzi scheme is illegal, isn't it? So they're definitely not doing that. But the element that is interesting or does lead you that way to think is just because of the new money required to currently service the existing investors.
Yeah. What do you think, Albert? I think I know your answer before you open your mouth, but carry on anyway.
The difference between Ponzi scheme and not Ponzi scheme is Ponzi scheme we only discover when the system fails, because if you don't know it before the system fails. Ponzi scheme, you find out when the system stopped working, right? But this is pretty much, the risk is clearly disclosed and communicated to investors, but it's up to investors to assess that risk. So it's not Ponzi scheme, but it's highly reckless strategy, I would say. A business that has a lot of, unknowable stuff that you really is tied to the price of Bitcoin. So yeah, it's pretty much, if you think a price of Bitcoin is going to go up, I mean, historically, and it's been going well so far for the investors. I think that's why we can see, those companies have been raising money. The problem I find is with this kind of business model is because you just, raising money and keep doing it, and if you don't do it, the system wouldn't work. Is at some point, the system will stop working. I don't know, is it 5 years from today, 10, 20 years? I'm not sure, but the system certainly cannot work. I think that's why, if you listen to the smart web company, what they're saying is they want to acquire other businesses. They know the system is not, the business model is not sustainable. You have to do something. You have to use the cash or acquire other businesses so you can diversify. You hedge your downside risk. So I see this sort of thing, some companies to become smarter and aware of the risk and find a way that they can use the cash that they raise into good use, acquiring businesses, and try to generate a good cash flow that give them, the hedge and so on.
Yeah. Can I just say here, when Awet says it's reckless, that is about as savage a comment as he'll ever make about anything or anybody. It's the same as Charlie Munger saying that Bitcoin is rat poison squared. That is pretty severe from Awet, because he's the politest person you'll ever come across. Very well said, Awet. Said with passion, I must say. It's a different issue whether Bitcoin is the future or not. That's a different question that none of us know the answer to. Can I just say, Awet and I discuss this quite regularly in the office, and Awet will say that the problem with Bitcoin is that there's no income. You don't know what the price is. It's a store of wealth, but it's not a means of exchange. And then I fire back at him what sounds like gold. And limited supply as well.
Yeah.
And he always looks a bit shocked when I say that. But it's just I personally think it's a digital gold, but I don't think you agree, do you, Awet?
No, I think the difference between gold and Bitcoin is, gold historically for 1,000 years, has been the storehold of wealth.
Yeah.
Where Bitcoin has to prove. That's the difference. But for sure, I personally would prefer gold than Bitcoin. It's just for a certain reason. Gold is more. I mean, even when you look at central banks, pretty much they are increasing their balance sheet to hold gold and so on. Where, they selling down Treasury. But interesting as well, like for example, with Treasury companies, what we recently seen is MicroStrategy was qualified to join the S&P 500. Right? It ticks all the boxes. Because, I mean, most of the regulators pretty much, they didn't approve it. Instead, they didn't take it into consideration. They didn't, make them join to the S&P 500. That shows you there's a pushback element of this. If the company is ticking all the boxes and qualified to be there, why not including it? So I think there are questions that regulators are asking, because probably they think it's a reckless strategy. They probably think this is a business model that they just buy Bitcoin in order to work. They don't have a real business. That's just, that we can list them on the exchange. So this is some signal that the regulator has sent to investors. We need to be listening as well.
Okay. What do you think, Carl? What do you think about Bitcoin compared to gold? Do you think it's a digital gold, or do you think it's something else? What's your opinion about it and the future of it? Because I personally can't see it keep growing at this stupendous rate forever. It's got to slow down, surely. What do you think?
Yeah. I think I definitely look at it as more being on the digital gold side rather than an asset like equities, because like how it rightly says, it's got more gold characteristics than equity because there's no income.
Yeah.
There's no management. I think, gold's been successful because it's been going for 1,000 years, but Bitcoin's only just been created, so you can't hold that against it as such. It might be the next gold, but it just hasn't had a chance to go for 1,000 years yet, has it? But one of the things where gold, because it's physical and it's been around since time began, that is the difference between Bitcoin. Because I always think anything that's built on technology, there is always the risk that something's going to come along and be better than it in the future. Yeah. And I think that's sometimes where a lot of Bitcoiners are complacent. They think they've found the solution now, and the fact it's limited supply, which is all positives for it. But what's to say in 10 years' time, with the advance of technology and computers and maybe quantum, that there is not an even better thing that comes along? Someone invents something even better, and everyone's like, oh, actually, yeah, that's better than Bitcoin. Let's all go on to that. And then Bitcoin's kind of worthless. That's where I kind of see the biggest risk.
Good point.
With Bitcoin.
Good point. Very good point.
Because it is built on technology which grows exponentially. But what a couple of other things going back to kind of strategy and smarter web company is, it's almost like I sometimes feel they're on phase one of their journey. And phase one is to accumulate as much Bitcoin as possible. And if you go back to that power law, and I'm not suggesting that the power law is correct and everyone should follow it. How you rightly mentioned the human element. So the people that don't like the power law are because they believe, well, Bitcoin is a human creation and humans have emotions and they're just things that you cannot predict in the future. How do you predict humans acting? So actually that's you shouldn't kind of go along the power law. But let's just set that aside and assume that continues to work for now. What companies like particularly Strategy have done is they've completely gone and ripped up the kind of bond market, essentially, because they're releasing products now where they're paying out 9-10% yields forever. And if you're someone going into retirement, and let's just say you believe in Bitcoin and Bitcoin price continue to rise, you would be absolutely biting someone's hand off for 9 or 10% yield as a retirement income. You can't get that in annuities. You can't get that on safe government bonds. You can't get that on, even the biggest companies on the stock market don't offer those kind of bond yields. So already he's got in and just say, look, I've got the best bond product in the market. So everyone's chucking loads of money at him there. So he's got a pool of money he can tap into there. But not only that, if you look at his the way he's collateralized that debt, he's only something like all the debt he's issued so far is something like 10% debt to net asset value. So this is highly collateralized. Again, I know it's on the basis that Bitcoin continues to hold its value and go up. But if you follow that belief, you can see why it's so clever, because he's issuing perhaps the best debt in terms of collateralization, in terms of yield. So he's got then a massive pool of capital, and there's far more capital in fixed interest markets than there are in equity markets, by the way.
Yeah.
So he's got all of that capital he can access, which is obviously they're going to pump to buy load and load and load of Bitcoin. Eventually, I think going into phase 2. So that could work forever, because it could just say, well, I'm offering the best yields. People continually want it. He then continually buys Bitcoin. But phase 2, I think what could happen is once they've got so much Bitcoin is they become the new banks. Because if you think about traditional banks today, all they do is they have fiat currency. They just hold an asset, which is fiat currency, and they just lend it out, bring it in, and then they just cream off the top of it, don't they? Well, if Bitcoin becomes the digital currency of the future, then the banks are going to be the Bitcoin treasury companies, aren't they? So that's then phase 2, where you could start to see a proper business model generated out of that.
Interesting.
I think with what you said, Carl, I think is a great point. But what you find is when you study history, I think the greatest thing you find is debt is pretty much the one who can take you out of the game, right? As a business. And of course, MicroStrategy balance sheet, the debt is now, let's say 10%, as you mentioned. But if Bitcoin goes down to 90%, the debt is not going to be 10% anymore. The core balance sheet will be underwater. So the key thing is, as you mentioned, is just critical point is the question that we don't have the answer is the price of Bitcoin, where it's going to go over the next few years. And I think that's pretty much, if we can answer that, we can figure out the rest. So it's a difficult one, but the 10%, if the price of Bitcoin is gone to like down 90%, the balance sheet is pretty much zero. Pretty much, it is underwater. Yeah.
But there's another threat we haven't discussed yet. That's the nationalization by government of Bitcoin. It has happened before in America in the early 1930s. The US decided that individuals couldn't any longer own gold, and they bought gold off of individuals. When I say they bought it at a massive undervalue. They basically stole it off the population. You could argue, and that was the same for about 40 years. So until personal ownership of gold was allowed again. So that's a big threat. If the US say considered Bitcoin too much of a threat to the fiat money system and the dollar, if they conceived it to be a big threat, they could conceivably do that, and that would be a big blow to Bitcoin as well. Although at the moment you've got a president who's very in favor of it.
I think as well, it depends on how powerful these Bitcoin treasuries can become. Because if you look back through history, the powerful people back in the day were the oil companies. And more recently, it's the bankers. And if you can become, if the government don't get on top of these, and you can become really powerful, then essentially you're going to have so much influence with government, aren't you? That you can then start to dictate what that policy is. So I think it's a crossroads, isn't there? It's where can the Bitcoin treasury companies become more powerful enough before governments maybe, sort of try and shut them down.
Yeah, even Satoshi Nakamoto in his white paper, when he, after the banking crisis, when he wrote, his argument was, the banking system is it works on trust, and it needs trust to work. And the Bitcoin idea emerged to create a decentralized system. But the question we should ask as an investor is it still solving the problem that after the banking crisis, to be the decentralized currency is actually more centralized now, Bitcoin, than decentralized. So it's not solved the problem that originally that emerged as to solve. I think that's the problem. You can buy on regulated, which is exchange, which is like Coinbase and companies like MicroStrategy buying it and putting it on the balance sheet. But the idea was to be decentralized, no government involvement. And I think we just used it, and I think government is supporting it now, and so on. But the idea was to stay away from government. It's a libertarian idea, just to become decentralized. And I think one risk I see as well, like if you mentioned, Tony, the government and cyber attack, which is, I think that was the biggest threat. If Bitcoin can be stolen easily, and that's one of the biggest risks, because the internet is one of the greatest human invention. At the same time as well, that's the biggest risk we face, because our data is exposed on the internet. And I think hackers are becoming sophisticated using AI and so on. And I think you have a broker as well who are facilitated vulnerability in companies and so on. So the system are becoming quite smart. And I think if you store your Bitcoin somewhere where it could be exposed. That's why I think, as I mentioned earlier, we prefer businesses that are embedded in our society. The reason is your risk is pretty much across all the world, where Bitcoin, your risk is pretty much in regard to smart contract. I think they are. Bitcoin is held with Coinbase. If Coinbase is hacked and all the coin is stolen, I think the company would have nothing apart from the website business.
Yeah, I mean, there's all kinds of Armageddon scenarios you could paint. I mean, if the internet in your country was taken down, if that was possible, that would destroy all businesses in your country. So you can use that argument with anything, I think. Yeah.
The argument is like, yes, the internet can be back. You can restore internet. Well, with Bitcoin, it's actually difficult to restore it, because if one is stolen in the blockchain, it's hard to reverse it.
Mm-hmm. Yeah, I think there's risk as anything, isn't there? You buy a quality company that has good cash flows, low debt. You're at risk of the management continuing to grow that company. Can management continue to invent new products? Do people still want to buy that product? Does another company come along and make something better than what you've got? So there's risk with everything. I think going back to the Smart Web company and Bitcoin Treasury companies, I think you've got two choices to make. One, do you believe in Bitcoin? And if you do, then you start to take a look at these, and then you've got a choice of, do you own a Bitcoin directly, or do you buy into a Bitcoin treasury company where it's probably going to try and do even more clever things that might eke out a bit more return on top of your Bitcoin? Let's not forget, these Bitcoin treasury companies, take Strategy, for example, been around longer, has massively outperformed Bitcoin. And they want their MNAV to be above 1. They need a premium MNAV, because that allows them to attract more capital to then go and buy more Bitcoin and grow it more aggressively. So they're always going to be at a premium. If they're not at a premium, then that's a sign of not very much confidence in the company or Bitcoin itself.
Yeah.
Interesting. And of course, premiums along with discounts and assets can last many, many years. I know it's not the same, but if you talk about property companies, real estate companies in the UK, there are some huge companies quoted on the stock market, like Land Securities. And the last time I checked, it was a discount to net assets of something in the region of 40%. And this is a huge company. But that discount, you think, I'll buy at a discount. I'm buying these properties 40% off. But that discount can last for years. And it reminds me of the old saying by, I think it was Warren Buffett, the markets can remain irrational longer than you can remain solvent. I think that's very relevant here. I think, guys, we've come to a natural close, unless you got any closing comments you'd like to make about the Smarter Web Company, because we've started talking about Bitcoin generally, haven't we? Which was inevitable, I think. Any closing comments we haven't brought out? I think it's been pretty comprehensive so far. What do you think? Any closing comments, guys?
I think I would say, particularly go back to Smarter Web Company. I've always said, Strategy have just taken a lead on this. It's going to be very hard for anyone to get close to their levels. So if you're going to go down the Bitcoin Treasury route, whilst you might have some success in the short term, if we look back at Smarter Web Company's shares, how volatile they were and how quickly they rose, you might get a little bit of that because their actual sort of share of Bitcoin they're buying compared to their current balance sheet is going to improve quite rapidly. So you've got that, but in the long term, they're not going to get anywhere near Strategy's Bitcoin holdings, are they? So I think in the long term, you could just look and just say, right, well, Strategy is just number one, well ahead of anyone else. Why go for anyone apart from that? I think you've got more risk with going for a smaller one, but you might benefit in the short term.
And you, Albert? Any closing comments?
Yeah, I think when you look at in general the market, it seems to be driven by fear of missing out, especially like companies like Smart Web Company. And I think it is generally the time to be when you can see risk. I mean, recklessness of risk there. I think everyone is just not thinking about risk. It's the time to think about risk and to pretty much, invest defensively, especially at this stage of where the market is higher, even though there's an argument interest rate is going down and so on, which it would inflate asset prices. But the reality is we just need to remain more defensively and aware of the risk that the market is facing currently.
Yeah. As Warren Buffett famously once said, when the tide goes out, that's when you can see who was swimming naked. That's very much your view there, Albert, I think. Anyway, folks, very fascinating and interesting and well-informed discussion there. Really enjoyed the show today. We'll be putting links in the show notes, including a one-page company snapshot on the Smarter Web Company to help listeners in doing their own research, whether they want to take a chance and invest in a Bitcoin Treasury company or not. Our next episode will be on another great UK company called Games Workshop. And if you don't know much about this company, you'll be amazed at what a great company, great UK company this is. If you're listening to us on the Apple podcast, please give us a review because that helps us go up the rankings. It helps us to attract more listeners and more quality guests for our one-to-one interviews, which we do from time to time. So all I can say is, thanks very much, gentlemen, Albert and Carl, for your tremendous contributions today. And we welcome our listeners to our next show. Have a great day, everybody. Bye for now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.